So today I'm going to be going over my ETF changes on my portfolio on Invest Engine. I did a video prior to this showing what ETFs were in my benchmark ETF portfolio, and I've added a few and I'm going to explain why I've added them. So I added, where is it? So I had iShares Physical Gold, which I'll show you quickly. Had a yearly return of 32.49, and then there's the Wisdom Tree Physical Swiss Gold, which had a yearly return of 32.5. When I checked over the max, they were slightly different. So what I've done is I've added two, and then I've split my percentages. So I had 8% in gold, then I've put 4 and 4, I think, but I have changed my percentages, so we'll go over that in a second. So I've added the gold, or another gold. The next section I've added is banks. So I've added this one, which is a ticker symbol X7PP, and it's the Invesco Stocks Europe 600 optimized banks. And the reason I've added it, as you can see, the yearly return is 47.16% over the year. And then if I show you the max, so since January 2021, it's up 248%, which is really good. So I think the reason the banks are doing so well lately is the interest rates are high. So the banks are getting better returns. And the reason I'm investing in them is I think they're going to stay high for a while. I'm no expert on this, but I think for the next couple of years they're going to stay high. I think they're going to come down very, very gradually, because the time before they went up, we had quite steady interest rates, and they were all quite low. Whereas obviously they're higher now, and they seem to be staying there. So let's go through. Here's the description here. So they're European banks. Emphasis on liquidity and relevance and high quality. So let's go down and have a look. So the cost is 0.20. No dividend on this. It has 49 holdings. Santander's at the top. HSBC. I'll just show all 49. Barclays, NatWest, Lloyds. Can you tell I'm picking out the English ones here? Credit Agricole I've heard of. ABN AMRO I've heard of. Okay, they're only very, you can see here they're only 0.2% in these stocks at the bottom. So what Investec, I've heard of Investec, I've heard of that one. Right. So let's see about regions, which should be Europe, but let's see. Oh, okay. So it says Europe, but it's actually 79% Europe and 21% UK. And it's saying 83.5% in financials and 60.5% in other. Okay, let's go look at the other bank one. So this is the other bank one. It's the Amundi Euro Stocks Banks. The ticker symbol is BNKE. The yearly return is 51.58%, which is really good. And then over the maximum, so this is March 2020, it's up 283.36%. I think that's higher over the time than the other one. So let's have a look at the description. Banks and financial institutions, Europe, large and mid-sized banks. Oh, and payment processings in this one. Okay, let's have a look. You can read more in detail, but I'm just going to skim over that. So the cost is 0.30%, 29, so less stocks in this one. Santander again. Let's have a quick look. When there's less stocks, like this one only has, what was it? What did I say? 29, I think. You get higher percentages in the individual stocks. So just thought I'd mention that. Regions. Okay, all of Europe there. Oh, and 1%, sorry, for the rest of the world. Sections, financial 93.4% and 6.6 in other. There we go. So that's why I've added the banks in. Really good percentages. I'm not saying I'm going to hold on to these for 10 or 20 years. I'm going to hold on to them, keep an eye on them, because if the interest rates come down, the returns might come down on these. So I will be keeping an eye on these, but I don't want to miss out on these yearly returns. They're really good. So right, let's go back. And then the other one I added was defence. So the reason I've added in the defence sector, I don't know if you've been watching in the news, but President Trump has been over to Europe and has been, let's say, encouraging, and the UK, encouraging Europe and the UK to up their investment in defence. So, say for I don't know all the percentages of all the countries. So let's just say they currently they might do 2 or 3% of their government spending into defence. President Trump wants it to go up to 5%, and I think that's why the defence ETFs have been going up. So 66.94% return in a year is I think that might be the highest one in my portfolio now, actually. I think it is. I can't, yeah. I mean, the banks were really good, but this one is even higher. So I don't want to miss out on the growth of this. Again, it's similar to the banks where I don't think this is going to happen year over year. So it'll be one I have to keep an eye on. But I can always amend my percentages down later if I see it slowing down. So, right, and here's the maximum. So since April 2023, it's gone up 152%. So that's that one. So let's go down. So it's for the defence and aerospace sectors. Okay, so the cost is 0.55%. That's one of the higher ones in here, but I don't mind that because it's given a good return. So, all right, let's have a look how many holdings we've got. 30, so there's not many. Oh, Palantir. I hold this stock in my trading 212 individual portfolio, which I haven't done a video on yet, but I will do. But I think that one's doing very well at the moment. This doesn't mean it always will. It's just it is on the up at the moment. There are the other ones. And you can see that's very concentrated, 10.2%, which probably actually explains the high yearly returns because that stock alone has done very well. So, right, let's look at regions. North America. I wonder why President Trump was asking for more investment then. Right. Europe, 19.7%. Asia, 12.8%. UK, 3.9%. Rest of the world, 3.3%. Right, sectors. So industrial, 34%. Technology, 20.8%. Consumer, 7.4%. Other, 37.8%. Okay. So the reason I've added the banks and the defence is I'm trying to figure out where the money's going at the moment. Where is the government trying to push their money, or which sectors are making money? So this is where I've come up with the bank and defence. So right, I'm going to go back. I've also amended my percentages because I think, can you see here my overall cost on the portfolio is 0.18%. If you look back on my other video, it was 0.21%. So it's actually gone down, which is really good. I can't remember what the dividend yield was on it, so I don't know if that's gone up or down, but you can check from my last video. So what I've done is I've amended the percentages on how much, because I've added some more, and I wanted to amend the percentages into what I wanted to put more into and what I wanted to put less into. So let's go over the losers a little bit. All right. So the dividend, I think the dividend in the UK were the sort of ones doing, I'm not going to say the worst, but they were the lower percentages. Um, well, actually, not the UK so much, but the dividend one. The dividend one, or world high dividend, is good. I think it's high in industrials. It's more steady and it has a good dividend, but it's not matching some of the other ones. So the percentages are lower. That's similar with the all world. The defence, even though I just showed you it was a really, really good return, I'm only put 2% in there. So it's not like I'm risking my whole portfolio on that big return. So I've tried to minimise my risk on that. UK, I think it might have been 4% before, and I've moved it to 3. And I think the UK, when you're comparing all the world, the returns for the UK is 4% of the whole world. So it was 4, but now I've moved it to 3. The gold, I had 8% in just the iShares physical gold. So now what I've done is just split them over the two. So it's not really changed that much there. Now the banks, I put 5% in each. So they're new. So the thing is, I had to reduce some of my other ETFs to be able to fit these other new ones in. So, if I'm putting 10% in banks, I've got to lose 10% from some of the other ones. So Europe, I've still got 5% in. Now America is split over a few, so let's group them together. So I've got North America. Now these two, one has the dividend and one doesn't, and I wanted both, so I've got 10% in them, 5 each. But we've also got the DAX and the S&P 500 and the Nasdaq. They're all America. So Spain is at 6%. DAX is at 7%. I think they were higher before. IT, I've got 11%. Nasdaq's at 13, and the IT, that was one of the high returns as well. I've got 13% in there. And as you can see, there's figures in all of these now. Because what I've done, when you go to options, you can go rebalance. And I've done that, and it rebalances the next day, but I've done this a few days ago, so it's already rebalanced. So I think when I did the video the other day, the portfolio was at 1.14%, something like that, and it's at 1.31%. But it's only since the 22nd of June, so it's, it's not much more than a week old. It's, a very short timeline. So that's what I've done. I've I added the savings plan to direct debit £200 a month, but what I've realised, can you see I've put a top up in here on the 1st of July, which is today, but the expected payment date is the 4th. So it has, when you put your money in, it has a slight delay, and you can see here I put some money in on the 27th, but it's not going to hit the account till the 2nd. The £100, this one is already in here. So there's obviously a bit of a delay with the processing side. And you can see here, like that was just done, and these say processing. So it takes a little while. And I also mentioned I have this in my ISA and my SIP, and I also mentioned when you put £100 in the SIP, you'll get 25%. £25 top up from the government, but that takes about 3 months to go in because I have this portfolio in both my ISA and in my SIP. So they're the changes I have made. Now, this is quite detailed now, and there's quite a few ETFs in there. So what I'm going to do is leave a copy of the portfolio in the description of the video. So if you want to copy it, I'm not saying do that because this is my personal finance and how I choose to invest. But because there's quite a few in here, I've also set up another more simpler portfolio with just 4 or 5 ETFs in there. And when I do the next video, I'll go over that and I'll leave the link to that one because I do understand that this is quite detailed. And if you're just starting out, you might want to just simplify it to even 1 or 2. But I've put the 5 main ones in the new portfolio, and you can always amend or delete them, so you have 1, 2, 3, 4, or 5 if you did want to copy it. But that'll be another video for another day. So, because there's getting quite a few in here. But I'm happy with the changes that I've made. So we'll see how it performs. I think what I'm going to do is I might do a weekly portfolio update so you can see how the returns are coming along, and you never know, I might make another change next week. So this way you can watch my investment journey and see what decisions I make and see what the returns are without having any risk in the market at all. And yeah, I just thought it would be interesting, so I might plan on doing that. I'm not sponsored by Invest Engine, but there will be a link below if you want to sign up. Again, you don't have to, because if you go on Invest Engine, you just want to look at what I've just been looking at. So you can click on the investments, and for example, if you wanted to look at the banks, so if you want to look at this bank, you just go on the Invest Engine site, click on investments, type in the ticker symbol BNKE, or you can type out the full wording and you'll see exactly what I see. If you do want to sign up, there is a link with a sign up bonus. I think you'll get between 20 and £100 worth of. I think well when I did it, it was cash, and then I bought what I wanted, and I've just left that as an investment. Um, there are terms and conditions on it, but I've left the link below if you want to. You don't have to use it. And I've also left a link to this portfolio below as well. Again, this is not financial advice. I'm just showing you what I'm investing in, and I thought it would be fun to share it. So, any questions, just pop them below, and hopefully, I'll have an update on the portfolio next week to show you how it's doing. Okay, thanks.